Hello and a warm welcome. You've joined us on Markets at Noon right here on ET Now. I'm Ashesha Advaryu and with me is Nifty Shah. And turning out to be a soft day for Indian equity markets. Nifty is absolutely flat as we speak, although we have recovered from the lowest point of the day near that 26,180 mark. Nifty Bank also in tandem with Nifty 50 trading absolutely flat in trade today. In terms of individual stocks, remember Coal India, that one is up 3% today, the biggest gainer on the Nifty index, followed by Ultratech Cement. There's a lot of action in the cement sector. We'll discuss that in a bit. Power Grid is also gaining in trade today. That's Ultratech Cement for you, up 1.5%. Power Grid is also amongst the other gainers. Metal stocks, remember, are shining bright. Something like NMDC, that one is the biggest gainer on the Nifty Metal Index. It should come up for you on your screens. NMDC, that one is up 4.5% in trade today, gaining from strength to strength. We have Hindustan Copper and SAIL amongst the other gainers. But on the losing side, IT stocks are under pressure today. We have Infosys, Oracle Financial Services, Persistent Systems. These are on the losing side. So yes, Nehi, that's how the market setup is looking like for the day. Absolutely soft as far as the benchmark indices is concerned, but several individual buzzers in trade today.
Oh yes, well, Shesha, lots of pockets in the market that are doing well. It's actually the small cap end of the market that is outperforming the entire market right now. The mid cap has slipped into the red, but the small cap index is doing well. A couple of big announcements coming in from companies like RITES, Belrise Industries, GPT Infra Projects, Vikran Engineering. A lot of stocks from the smaller end of the basket seeing order wins or other positive news flows on the back of which they're doing well. And the small cap index is also doing well for itself, up 0.3%. Let's get a better sense of where the market is heading right now at the midday mark and what lies for the market in the near term, at least for a week is truncated as this, where we have two expiries playing out back to back. You have the weekly Nifty expiry today, and remember, tomorrow is going to be the monthly Sensex expiry. Putting all of this together into perspective, what this means for the market on the technicals, let's get a better sense from Dharmesh Shah, Head Technical at ICICI Direct, joining us on the show. Dharmesh Shah, good afternoon and thanks for your time. First up, give us your sense on where do you see the Nifty headed by the end of this week. It's a truncated week, but like we were talking about, two expiries clashing back to back. Little pressure is being seen on the market right now given the way the Nifty has been absolutely range bound after the gains we saw yesterday. But what's your outlook on the Nifty and Nifty Bank for the rest of the week?
So good afternoon, Snake. Yes, definitely. I think so. The week started on a very quite positive note. We see a gap up opening, and Nifty seems to be managing this gap. We can say a breakaway gap, and I think so that supported by falling trendline breakout. I think so. It looks like I think so end of corrective phase, and we should be challenging the life high of 26,300 in the coming weeks. So yes, we remain to be positive for the market as strong support. Nifty seems to be finding at 50-day exponential moving average multiple times. Even in this elevated volatility, we managed to hold these levels of 25,700. So any dip towards 26,000 to 26,900 should be looked as a buying opportunity to challenge the life high, which is 26,300. Coming to something on the medium term perspective, we believe I think so the way the broader structure seems to be forming, I think so looking at the Nifty 50 constituents, it looks like I think so there may be the market is going for Santa Lily, where we should be looking for target of around 26,700 by January. So I think so any dip towards 25,900 should be looked as a buying opportunity. One important thing to highlight is that I think so the USD INR, I think so that is something interesting to watch out for, where it seems to be on the reversal side, hitting after the upper band of the channel, where we have witnessed some bit of a profit booking. But if you look at the historical trend, whenever it has hit the upper end of the channel, almost 4 to 5% correction have been witnessed in USD in next 1 month. And at the same time, inverse correlations with the Nifty, where Nifty has average gain around 10% in next 2 months. So we remain to be constructive, positive for the market. Dip should be looked as a buying opportunity as far as Nifty is concerned. As far as Bank Nifty is concerned, Bank Nifty has been holding this 20-day exponential moving average in this entire volatility. So it's clearly showing the relative outperformance in Bank Nifty. We remain to be also positive for the Bank Nifty, where we look for a target of around 60,500 to 61,000 by January. So buy the dip should be the strategy with a strong support placed at around 58,500.
So that's the view on the Nifty and Bank Nifty. But let's also talk about the IT sector then. And Nifty IT index is underperforming in trade today. Your view on the entire sector, and if you can share any stock specific ideas from the sector?
Absolutely, I think so. What we see today is more of a profit booking, but we should not forget that the Nifty IT index has witnessed a very sharp gain in last 2 weeks. So it's more of a normal retracement, I would say, for the Nifty IT. Because if you look at the ratio chart of Nifty IT versus Nasdaq, it clearly at the lower end of the channel, and it clearly shows that in the coming days, in the coming year, I would say 2026, we expect, I think so, IT to relatively outperform the Nasdaq. So we remain to be positive for IT. Tips should we look at the buying opportunity in most of these large cap stocks like TCS, Infosys, Wipro, HCL Tech remains to be on the positive side. So we are not negative for IT. We believe this current profit, it's more likely a current profit booking of a sharp rally it has witnessed in the last 2 weeks.
Okay, so that sounds good and not negative on IT right now is the stance coming in from Dharmesh. On that note, Dharmesh, we'll let you go. Thank you so much for your time today and thanks for joining us.